Hi, today is Monday the 8th, and this is a weekly recap for the Rhinos. And this is the March Rhino. And as you can see on Friday, I took a kind of a bearish bet to, so basically remove the last PDS. And this is what it would look like the day before, Thursday, with a little bit of positive delta. I mean, the trade was very safe, but I said, well, this trade has very little delta. Am I going to wait for this long? Not, and also by doing this little trick, okay, I forfeit about $100 of profit, but I mean, it can be an interesting development to this trade, and I can close it 90 times. I mean, if it doesn't pan out, I mean, it's okay. There's no risk on the upside. Of course, it is, I would probably pay 5 cents to get rid of the CCS, at least until it's no longer liquid. So I'm not sure whether I'm going to do it or not. The good thing also is that on the PM account, to have removed the last PCS and I have no risk, no downside risk, my the 4.4K margin actually is next to nothing when it comes to PM. So I've got really peace of mind in terms of capital reallocation to April and May. And if we have an explosion of volatility, it may actually be interesting, at least on a PM basis, to put capital onto May, since I've got little to gain from March. So this has actually justified this move. And also, I mean, this kind of bearish bet is fun. I mean, if the market drops, I don't think it's going to drop that far, but it could drop 37 or maybe below. It could be a little extra money. Now let's move on to April. April is doing absolutely fine. Flat delta. It has a little bit of Vega pressure, but not that much. I would say at the close it was about 388, and as you can see, when the market now goes down now in pre-market activity, we're losing a little bit. That said, that's why where my VXX position is really helping. I was even thinking on Friday of reducing the trade further, losing about $200 of profit potential, and actually cashing in on my VXX. My VXX, and I recommend about, let's say, 200 VXX shares per tranche. I mean, it's working beautifully at the moment. I am probably going to go maybe a little bit more speculative than just hedging, but I'm probably going to increase my VXX holding to maybe 300 or 400 per tranche, but that's not really necessary at this time. That being said, Vega hedging is a complicated matter, and it only works now because of the Vega structure of my trades. A wide attempt, not too much Vega here, so there's not much T plus zero sinking when volatility just spikes up. So this is fine. If you have a more conventional, classical, traditional Rhino with a lot more negative Vega near the money, you would have to hedge with more VXX than I do. So at least it's a cheap hedge for this conservative type of trade. So I'm pretty happy with my trade. Now 39, as you know, VIX and VXX are 30-day projections of volatility. Now that March is out of the way, in May, the new May entry is very resilient as it should be in its early days. This is really VXX for April. So I may cash in, I may just use this as a hedge and gradually start thinking as VXX as the May hedge. We will see how it goes in the next few weeks. So on this trade, as usual, I'm pretty happy with about 800 to 1,000. So I may do a little bit more here, but really, it's not really necessary. I am actually using a little bit of leverage on my PM account, so I'm making more than just 2% on Reg T. So on this trade, nothing much is planned in the coming days, unless of course the market goes down rapidly, and I see that my VXX is not properly hedging it. But so far, I would say that my VXX holding is helping me be a little bit more passive in hedging my options position as such. So nothing much here. And on about May, I entered the May trade a little early. I think it was on Wednesday when the market started diving. It doesn't seem that I would have done better if I had waited for Friday. This trade is still hovering around zero. It doesn't use much in terms of PM and only 7.5, 7.7K rate T. So it's not a matter of building it up. And we are using rate T, we are using about 20, about less than 70%. So there's no capital constraints even for rate T traders either. So on this trade, it's just a matter of building it up. And if the market keeps this good, strong volatility, it's actually quite interesting to build it up with maybe an additional Russian butterfly here. Would I put it higher? Probably not, although here I must be careful that if the market bounces back, I will get to negative theta, which is something I don't want. I would probably put on an Einkondor or another. If I put on another broken butterfly here, it's not going to be helping my theta much. It's just going to be a little bit more profit potential, or maybe up to 3,500, 3,600, but it would be a slow trade. So it's probably more interesting to go for an IC. It is early at 74 DT. There's no way to know where the IV skew will be. So basically, the trough of. So if I was to do that, I would have to place my CCS very high, probably 44, 50, 40. But at the same time, I'd like to get at least $1. So that would probably, I would say 30, 4,300 would be, yeah, 43, 43.20. It may be a little low. So the other possibility is to just go for the PCS side of the IC right now. And I mean, I don't know. I can just maybe add one here. As you can see, I will already turn positive in terms of profit potential. So it's a kind of a what we used to call a reverse Harvey, just a PCS and the upper longs. And later on, if I see that the trough is forming, I will balance that with the CCS. So nothing much to do here. I just need to control my theta here. I don't want the trade to stand still and do nothing. So that is it for now. I hope you will have a good week. And as always, please join us this Rhino Slack for more regular updates. Thank you for watching and bye for now.